Hi traders, it's Andrew and I want to show you an example of a bullish bat pattern that's set up on the pound US dollar. So the first thing we want to do is identify a key level of support or resistance. You can see I've compressed the chart quite nicely here, and what I'm looking at is I'm looking at the very low to the very high. Okay, so if we just zoom this up, you can see this is the upswing. If we take our Fibonacci tool and we draw it from the very low up to that high, we're looking for areas where price is likely to bounce or react. Now remember, we're not trying to just trade the level on its own. We're looking at finding patterns at these areas. So if we take a horizontal tool and we just drop it from the high down to the low, you see 38 level, we had a nice area of horizontal support resistance lining up. Then move down and you see this area around the 50 level. Look how price reacted around this area. We have support in here, a bit of resistance, price holding again as support. Look at the spikes through support, trades back, back above the level, okay, and reacts again. So this is a nice key area to look for a possible pattern or trading opportunity. Now if we move over to the hourly chart, this is where the pattern's set up. You can see we've had reactions off these areas. So these are the levels here. You see that key area. Okay, if you find a potential pattern setting up at this area, okay, you want to look for a possible buying opportunity. So you see this nice move up. You see how we've got a higher high and higher low here. Okay, so we've got an uptrend in place coming off that higher time frame key area of support. So if we take our Fibonacci tool and we draw it from the low up to that high, you can see prices start to retrace, hit the 38% Fibonacci level, and then it started to rally, having a go up towards the highs. Now once it hits a 38 50, or sort of in between the 50 and 62 level, 618 level, you want to start thinking about the possibilities of a bat pattern setting up. Okay, and if price retraces and hits a 618 level, then you want to start thinking about the possibilities of a Gartley pattern setting up. So once price rallies, retraces to a minimum of a 38%, and then it starts to move up again, you want to take a Fib tool and draw it from the high down to the low. Okay, now you can see the Fibonacci retracements I've got on here. We've got a 127, a 1618, and the 20. Now the 20 is not a very well-known number, okay, but it is used with the bat pattern, and it's worthwhile adding it to your Fibonacci extensions just to look for that confluence. Okay, so if we just follow price along here, you can see price starts to move down. And once price breaks that low, or even, you can put your order in before that, just remember with this leg down, okay, so if we label this X, A, B, C, so that leg from C down to the potential D area, in a bat pattern can move very aggressively, okay, very aggressively. So if we mark this area off, this is the level in here that I would be interested in trading this pattern. Okay, here again you can also reference on the left hand side. You see how we had these this base here, little bearish candle before price broke to the upside, another little bearish candle here before price broke to the upside. If we just move this up, what I want to do is I want to look around this area here. Okay, so there's that level there. Remember, this is that key level from the higher time frames, and it's right at that confluence area. It's actually sort of setting up as part of this bat pattern. Okay, so around the 58.32 area, we've got 58.28 is the 886 level. So I'll put an order in at the 32, and if we just go to our platform, if we go new pending order. Okay, so remember we want to set up a buy limit, and the area 1.58, I'm going to put it at 32. Okay, remember we've got this level down here, so we're already adding the spread in and plus sort of a couple pips above that area. In terms of stop loss, let's just go in. I'll just see where the 20. Sorry, what's going on here? I just want to see. Let's try 30 pips. Okay, so we'll put it stop in around 30 pips. You see, just below that low. If price breaks through that low, then I don't want to be in the trade in terms of the actual bat pattern. Okay, the bat pattern would have been taken out. And in terms of targets, okay, now this is going to be sort of the real discretionary element. Okay, and each trader is going to do this a little bit differently. You could either look at the first area, if you don't want to manage the trade actively, the first level of resistance, which would be right here. Okay, or you can start looking at the highs. Highs are a good place to potentially look for profits, or sort of that first area right there. Or you can always look at, you know, taking profits out at these levels. So we just place an order. I'll leave the take profit out for now and just see what happens. See how price is moving very aggressively now. Now a lot of people won't want to get involved when price does this, but this is sort of the beauty of these patterns. Okay, this leg here moves very aggressively down to your entry. Okay, it just stalls here. It stalls around that 79 area, and just looking to see what that price does. You just look at our pending order there. Okay, order's still waiting to get taken in. Price is having another go down towards the low. So we've just been taken in. You see how we had that spike down lower into this area here. Okay, so there's your working order there. Entry 58.32. The completion point was 58.28. So add the spread plus sort of 1 or 2 pips. And now we see what happens. Now you've got to give these patterns time to breathe. They normally sort of sit around like that. Remember, very seldom will it just sort of spike down and then rally and take up, you know, the whole move in one move, in one candle. Okay, so you've got to be very patient with this. The best thing, in my experience, is just leave these things alone. Okay, to breathe. Don't get too aggressive with trying to reduce the risk, because more often than not, price will come back and stop you out. Okay. Remember, this is a big hourly pattern. It's taken a good few days. You can see 10th of April here, and it's the 16th of April. So it's, you know, it's taking a good while to set up. So you've got to be patient with these kind of patterns. See how price moves up now into this area. You need to see price clear that level. Okay. You want to see it clear that level. It's coming back now. If you want to, you can look to reduce some risk by putting a stop just below this low now, because now you've got this base. You see price closes above this base. We just zoom this up. See how price is trading in a range. So you've got this area right here, support in here, breaks down. Okay, comes into this area here where we've entered the trade, then it builds a base, then it closes. So this is bullish. Okay, closes above the base here, comes back, retests this little bearish candle here. Remember, we spoke about candle closes. There's the candle close, comes back, retests the base, rallies. Where's it gone to? Okay, it's gone right here. See this large little bullish candle? Okay, remember when we spoke about fine-tuning levels? So, place to take profits if you want to. Okay, but remember this is a big pattern, so we want to be a little bit patient. Price coming back, you see the spike down. Okay, this is why I say you don't want to be too aggressive with stops. If you want to, you could move the stop up, but I'd rather like to see price starting to release and move away from this range. Once we start committing above, and we can close above this level, I'll be far happier with the trade. Okay. Okay, so now you see this candle close above the level. It's taken out in this area here, so we would have had any stop losses and things taken out now, which clears the way for further up movement. Okay, so we've got this area here and we've got the base. Now in terms of targets, you see this. Let's just get rid of this quickly. we've got a target level up here. This is the first level of resistance, sort of major resistance. Definitely want to eye that area out, okay? What you can do is you can drop Fibonacci from the high down to the very low, and also look for confluence, okay? So you see 38.50 doesn't really line up with anything until we get up to the sort of 62 area here with this base. But these key lows here, okay, very important. So what we can do is we can look to possibly take some profits if price gets up there. We'll just wait and see what happens. Now what you can do is you can go down to the very small time frames if you want to. You're already 50 pips up. What we can do now is we can get the stop to break even. So I'm just going to move that to break even. So 58.32, stop loss of 58.32. We've got an open target at the moment. And what I want to do is I want to see how price reacts to this area of resistance up here, okay? Now, you can always look to trail your stop or take profits out the market. As I said, everyone's going to do it a little bit differently. So now we're starting to look at the micromanagement of this trade. You see how we have these areas in here. Okay, and here. So our price is starting to tire out a little bit here in terms of the actual candles with the wicks. Look at the wicks here. Okay, so price has now come up to that area of 72 pips up on the trade. Just have a look at that hourly chart. Okay, so you can definitely look at taking profits there. Right, what I can do here is we'll just keep it simple. We'll take a close part of the position on this platform and we'll just close half the position there. So that we have half the position working. Okay, so now we're down to half our position. We'll just have a look at the 5-minute chart. Okay. So you want to watch this closely. If price closes back below here, depending on how aggressive you are in terms of your management, you want to actively manage this. As soon as price closes below a level like that, okay, if it comes back to retest that area, sort of around here, you can look to take your full position off. I'm just going to step this forward and show you here what happens. Okay, so you see how price rallies and breaks back above. What you can do now is you can move your position up, your stop loss. We can move it all the way up to just below this low. Okay, so 58.91. What I'm going to do is I'm going to modify this, and here again, being very aggressive in terms of a big pattern like this, but I want to show you guys different ideas in terms of the actual trade management. So 58.91. I'm going to put a stop loss or move our trade up to just below this area. Okay, if this thing's truly bullish, I don't want to trade him back below this level. But if we just have a look now, you see how we flip between the different time frames. So you see the 50 level here starting to reject. Look at the actual candles on this hourly chart. You see how the candles start to reject here. Okay, this is an indication that we're likely to pull back on this trade on the short term. Price is breaking down here on the 5-minute. It says close below the base here. Likely to still playing around here a little bit. Let's move price forward. This is a very quiet time of the session, and here again, you know, if you're trading these big patterns and you don't want to be actively involved with this, you can target these areas like this key resistance here or these highs. Okay, I'm just going to follow this along. Some of you guys would want to micromanage the trade. Okay, so then you see it's been spiked down. So we've been taken out of the trade for 72 and 59 on the rest of the position. And I'll just step this forward to show you. Go to that hourly chart. So you see our price starts to break down before finding an area of support and then rallying back up again, okay, to new highs. And this was back on the next day here. You can see start of the London session before it started moving up.